Good morning, I'm Peter Milios from the Finance News Network. Stocks traded lower Monday, pausing a January rally as investors braced for the busiest week of earnings season. The upcoming week is also full of potential market movers, including policy decisions from central banks, as well as inflation and employment data from the US, Eurozone and China. Overnight, the Dow Jones Industrial Average declined 0.8%, the S&P 500 fell about 1.3%, while the Nasdaq Composite dropped by roughly 2%. Despite the declines overnight, the S&P 500 is headed for its best January since 2019, when it gained nearly 8%. The broader market index is up 4.6% for 2023, following a 19% loss last year. As a result of this year's strong performance, short sellers have suffered. Short sellers made a killing in 2022 with $300 billion in mark-to-market profits due to inflation and high interest rates affecting major companies. However, this year the market has recovered, causing short sellers to incur $81 billion in mark-to-market losses. This is a sign of a recovering market, but growth companies have returned to trading at a more palatable multiple for value investors, causing short sellers to close out bear positions. There are also several tests this week for the 2023 rally. About 20% of the S&P 500 will report earnings this week, including McDonald's and General Motors on Tuesday, followed by tech giants Apple, Meta Platforms, Amazon, and Alphabet later in the week. The Federal Open Market Committee meets on Tuesday and Wednesday, when the Fed is expected to hike rates by 1/4 of a percentage point. Investors will be looking for clues about how much higher the central bank will take rates in the fight against inflation. Traders have pushed stocks higher this year, in part because of the softer inflation reports, which they suspect could cause the Fed to soon pause its hiking campaign. In electric vehicle-related news, Ford shares declined more than 2% after the automaker said it's cutting prices and ramping up production on its electric Mustang Mach-E crossover, following a similar announcement from Tesla. In addition, in China, big lithium miners are expected to report record earnings after surging demand for electric vehicle battery materials sent prices surging to an all-time high last year. The bumper profits have come as Chinese prices for lithium carbonate peaked in November after jumping around 15 times from the lows in 2020. The S&P 500 sectors overnight performed mostly lower. Information technology and energy were among the biggest laggards, each down 1.9% and 2.3% respectively. And the EU has proposed new energy and export sanctions on Russia, and China and India may not be here to help. The EU will ban imports of refined Russian fuels on the 5th of February to add to its embargo on seaborne Russian crude oil that began in December, but China and India may not buy the refined fuels once sold to the EU. The SPY futures are pointing to a 0.1% fall. Thank you for listening.